Good morning, traders and investors. Welcome back to our channel for morning trading recommendation session. As we sip our first coffee of the day, let's align our trading compass with the latest market trends. But first, a quick reminder: everything we discuss is for education purpose only and not to be taken as a financial advice. Trading is risky, and we always recommend doing our own research or consulting with a professional advisor. Now, with that said, let's jump into the heart of the market. Starting off with vegetable oil market, yeah, we saw some interesting movement overnight. Soybean oil for March delivered dipped slightly by 0.42, which is 42 ticks to 45.6. Meanwhile, over the Indian, the most active palm oil contract took a different path, rising by 20 points to 7120. Switching gears to Malaysia, the crude palm oil futures for April um, saw a decline of 44 points, settling at 3798. This marks its third consecutive sessions of decline, influenced by weaker river oils and some not so encouraging economy data out of China. Despite this, it's worth noting the contract still manage a money gain. Okay, this is ended of last month, January. Okay, on technical front, the FCPO is showing signs of downward trend. If you're looking at the current trend, closing around the 3800 to 3790 range. For those eyeing the market, a rebound sell could be in play with expectation for further drop if for the bigger picture. Yeah, so here's what we're looking at for potential positions. Short position may be considered below 3820, targeting 3775 to 3764 with a stop loss at 3850. For the long, can consider above 3820, could aim for target at 3840 to 3862, keeping a tight stop loss at 3790. Support is pegged around 3795 to 3790 range, which is the closing on the previous session, with resistance looming at 3825 to 3830 range. Okay, so we are moving into the index market. Okay, the Dow Jones industry average enjoyed a surge up by 369 points overnight. This rebound comes as investors recalibrate their expectations following a Federal Reserve announcement, putting the rest any immediate hopes for rate cuts. In Malaysia, the FBM KLCI index remains steady, reflecting the mixed sentiment across Asian market ahead of the Fed interest rate decision. The futures, especially for FKLI, February, now the active month switched to February already, held its ground at 1518. Given the upbeat momentum in US, FKI could see some interesting plays. Currently, if you're looking at the bigger picture, it's consolidating within a range and showing potential for an upward move if it break resistance. Okay. For trading strategy, short positions can be considered below 1518, could be starting point with target at 1514 to 1509 and a stop loss at 1523. On the long side, alternatively, can be considered above 1518, might look forward to 1522 to 26, safeguarded with a stop loss at 1513. Support for FKI spotted between 1510 to 1505 range, with the resistance ranging from 1523 to 1527. For support resistance, it still remains the same as the previous previous two sessions because the market still trading in the range. Okay, and that wraps up our morning briefing. Remember, the market is always changing and staying informed is key to navigating these waters. We are back with more updates and insights, so make sure to hit that subscribe button and turn on notification. Until next time, happy trading.